Part B. No, because YouTube will reject it if it's too long. We're about ready to have like a feature film here.
I know how to keep it on YouTube.
Is that my 16% there?
28,135, 16% of that number. Okay, do the same thing for April. Okay,
So all the months will be that same percentage, the
Yeah.
30, 50, 60.
yeah. So 184 times 30% we collect in April, which is 55, 39118, 92, 318, 63, and 29, 54196.
And just for a second, how did you arrive at the 16% again?
30 plus 50,
It's 80.
20% left, so that's 20%, and it says 20% of that is uncollectible. So we throw away 4% of whatever's left, goes in the trash,
Okay.
okay? And then you do the same thing for May. 30% of the May sales are collected in May. And 50% and then for June, same thing. Okay, so you can total all those up. Okay, so you can see on a spreadsheet how cool this would be. Because all you have to do on a spreadsheet is put in the sales numbers and everything else gets generated. Okay. Any questions so far? Okay, the last part of this question is accounts receivable budget. Okay, so from the March sales, how much is still in accounts receivable? Here's March sales. We collected 30, 50, 16. As of the end of June, how much is in accounts receivable?
At the end of June,
Yeah,
at 4%, right?
4%.
The 4%?
4%?
Yes.
Okay, you're almost right, except that the 4% got written off.
Oh,
Right.
percent
because
is
it's only
uncollectible.
after it.
That's the last installment.
So,
It doesn't get written off until July, though,
No, not
or
for
June,
March.
till June,
it says it gets written off in,
15 days after the last installment is
But
paid.
that 15
So
days
June will
after
be
that installment.
May, so June is 0. You're right.
15 days, so on June 15th,
Yes,
it
0.
gets written off.
But you carry it in accounts receivable until that date.
Right.
Correct, but our AR is as of June 30th.
Oh, so you're not comparing a monthly?
Right.
Oh, okay.
Okay. March sales, how much is left? We collected 30, 50, 16, so that's 96% we collected. Through June 30th, there's 4% that is still hanging there as of June 30th. It'll get written off July 15th. So April sales,
Can you say again?
So you got from there.
So that's,
On the left.
from,
Yeah.
yeah,
So
from
that's
March,
what's left over from March. Okay.
so that April amount is just 4% of,
June. Right?
this 7,000 is 4% of what we sold in April.
okay,
We collected 30, 50, and 16.
16. Okay.
Okay, so 4% is left. Now, in May, we collected 30, 50. How much is left?
20%.
20%. And in June, we collected 30, so we've got 70% left. Okay, so this, let me put the percentage. 70% left. Here we had 20% left. And here we had 4% left. And nothing,
Well, you wrote off the 4% there, right?
yeah, up here.
So you would, I said, you would credit that for that debt, right?
Yeah,
Say you were closing this fiscal year in June, how would you do the bad debts for
how would
July?
we do?
Bad debts, the uncollectible, would you write it off in June or just carry
No.
on the next month?
The 4% from April is still in here. It gets written off in July. Okay, it's 15 days after the last payment, so that's July
So no
15th.
matter if I'm closing the year in June, I still have to write it off in July?
Yeah, oh yeah. Now, you could still do reserve for uncollectible accounts, and you would do that every month. Okay? So that 4% is in a contra account, it's in a contra account, in a contra account. So that's part of your month-end adjusting entries, is to reconcile that contra uncollectibles, yes.
When it says prepare cash receipts and accounts receivable budget through the end of June, is that just saying they want it as of the end of June, or is it every month? You should prepare it.
We're just
And
doing
we're
it
just-
at the end of June,
Okay.
but they would do it every month. Okay. So, the last problem we did was purchases and accounts payable. This is sales and accounts receivable. Okay. What's the difference?
That was it.
It's just, you know, one's a debit, one's a credit. One's an asset, one's a liability.